first here, Gucci, the latest luxury brand to accept crypto payments in store. Gucci, a well-known Italian high-end fashion label, has announced that it will start accepting cryptocurrency payments by the end of the month in 5 of its United States stores. The company plans to extend the service to all of its 111 stores in North America. That is pretty exciting. Gucci will accept 12 cryptocurrencies for payment, including Bitcoin, Bitcoin Cash, Ethereum, Wrapped Bitcoin, Litecoin, Shiba Inu, Dogecoin, and 5 US dollar stablecoins, according to Vogue Business. Customers paying with crypto at the pilot locations in New York, Los Angeles, Miami, Atlanta, and Las Vegas will be sent an email with a QR code to pay via their digital asset wallet. Employees have started to undertake training and education on crypto and non-fungible tokens in preparation for the launch. That is speaks volumes to the company, I think, because I know a lot of companies, not even within crypto, that roll out new things, and the employees have no idea how to handle it. So I think it's good that they're going through this training for sure. Gucci has been quick to adopt Web3 with 2 NFT collections launched in 2022. The first, Super Gucci, was in collaboration with toy brand Super Plastic in February, and the second, Gucci Grail, was targeting owners of existing blue chip NFT projects. Gucci has been expanding its business into Web3 by purchasing virtual land. This will allow them to create a virtual retail experience that mirrors their Vault e-store. Gucci Vault is an online concept store that features a curated selection of rare vintage Gucci pieces. It represents the brand's presence in the metaverse. There is a tweet out from the Sandbox game, and you can watch that video there if you go to their Twitter. Cryptocurrencies and the Web3 space are becoming increasingly popular, with high-end brands jumping on board. In March, the fashion label Off-White started accepting payment with 6 cryptos in its flagship stores in Paris, Milan, and London. Off-White is majority owned by LVMH, which has been involved in the adoption of Web3 technologies. The company has released NFTs under its Hennessy, Bulgari, and Louis Vuitton brands in the past. LVMH's luxury watch brand Hublot has been releasing collections that can only be purchased with Bitcoin. In February, the brand partnered with cold wallet provider Ledger to launch a limited edition watch and Ledger Nano X. That is pretty cool. So they have these certain collections that can only be purchased with crypto. So if people really want them, they have to delve into the crypto sector, even if they weren't familiar. So, that's a good way to get people on board. Cryptocurrencies are being accepted by an increasing number of merchants. Brands like Frank Muller, Norgain, and Philip Plain are all accepting crypto payments, and even car dealerships and car manufacturers are starting to accept digital assets for high-end vehicles. The Equinox Group, a luxury fitness company, started accepting crypto payments for its New York City-based clubs on May 3rd. Club memberships cost just under 1.4 ETH or $4,044 annually. So, that they have it titled here, crypto is a luxury. It's nice and more people are adopting it, but also I wish it was more mainstream so that people who are not, going to be buying Gucci or a high-end car are able to utilize using crypto to pay for things. I think it's coming. It's just going to take some time. Up next here, some technical analysis. Ethereum regained strength, but 3K is still a major hurdle. Ethereum has seen a modest price increase in the past few days, with the currency breaking above $2,760 and continuing to rise. ETH has surpassed the $2,850 and $2,880 resistance levels, moving into a positive territory. Ether had a strong rally, surpassing the 2,900 degree and the 100 hourly simple moving average. There was a sharp spike above the $2,950 degree, and the value traded as high as $2,969. The currency is now consolidating its gains under the $2,980 resistance zone. ETHUSD is buying and selling above the 23.6% fib retracement degree of the current wave, from the $2,756 swing low to the $2,969 excessive. There may be a serious bullish development line forming with assist close to $2,900 on the hourly chart of ETHUSD. On the upside, a preliminary resistance is seen close to $2,970 degrees. The first main resistance is close to 2,980 degrees. The most important breakout zone is now close to the 3,000 degree. A shut above the 3,000 degree might set the tone for a bigger enhancement. If Ethereum fails to break past the $2,980 resistance, it may fall back and correct. The initial support on the downside is close to the $2,920 zone. The next key support is close to the $2,900 level and the trend line. If there's a drawback break under the development line assist, Ether Worth may take a look at the 50% fib retracement degree of the current wave from the $2,756 swing low to the $2,969 excessive. Any extra losses may name for a take a look at the $2,850 assist and the 100 hourly easy transferring common. So you can see the chart there, some more technical indicators right there. Up next, Bitcoin pushes the 40K, but are bulls strong enough to win Friday's $735 million options expiry? Bitcoin price has been falling for 2 months, testing the $37,600 support multiple times. This bearish price action is compounded by the fact that BTC is down 16% year to date, mirroring the Russell's 2000's performance. Bitcoin's current price is being driven by investors' concerns about worsening macroeconomic conditions. Professional investors are worried about the impact of the U.S. Federal Reserve's tightening economic policies. On May 3rd, billionaire hedge fund manager Paul Tudor Jones said that the environment for investors is worse than ever because the monetary authority is raising interest rates when financial conditions are already worsening. According to CNBC, Russian crude oil imports will be phased out within 6 months. European Commission President Ursula von der Leyen said the ban on all Russian oil, seaborne and pipeline, crude and refined, will be complete. I wonder how much that is going to affect oil, gas prices even more. Cryptocurrency traders are increasingly concerned about the potential impact of a global macroeconomic crisis on cryptocurrency markets. If global economies enter a recession, investors will seek protection by moving away from risk-on asset classes like Bitcoin. Bulls did not expect prices below $40,000. Open interest for the May 6 options expiry in Bitcoin is $735 million, but the actual figure will be lower since bulls were caught by surprise as BTC moved below $40,000. A call to put ratio of 1.22 shows that there is $405 million worth of calls or people buying options against $330 million worth of puts or people selling options. Despite this, as Bitcoin nears $39,000, 89% of the bullish bets will likely become worthless. Are you guys bullish or bearish on Bitcoin? Meanwhile, if Bitcoin's price falls below $39,000 on May 6th, bears will have $100 million worth of these put-sell options available. This difference happens because there is no use in having a right to sell Bitcoin at $36,000 if it trades above that level on expiry. And it goes over all of these different levels and how many buys and sells there are. This crude estimate considers the call options used in bullish bets and the put options exclusively in neutral to bearish trades. This oversimplification disregards more complex investment strategies. There are a few different ways traders can gain negative exposure to Bitcoin. For example, they could trade call options, which would give them negative exposure to the cryptocurrency above a certain price. Unfortunately, there's no easy way to estimate this effect. Bitcoin bears need to sustain the price below $39,000 on May 6th to secure a $145 million profit. On the other hand, bulls can avoid a loss by pushing BTC above $40,000, enough to net them $100 million in gains. Considering the bearish macroeconomic conditions, bears seem better positioned for May 6th's expiry. It's crazy to see just how much of this, how much the bulls and bears can affect the price. How many people are selling, how many people are buying, just causes the price to fluctuate so much. Up next here, Bitcoin hash rate soars to new all-time high. Will price follow? This is a Bitcoin US dollar chart. This is the one-day chart on TradingView. Bitcoin miners around the world use computational power to affirm and course of transactions on the blockchain. This is measured by the hash rate, which can be replicated the overall usage of Bitcoin mining. The hash rate grows or lowers depending on the number of miners around the world. There is a believed correlation between the value of Bitcoin and the hash rate. The higher the hash rate, the healthier and safer the community is, which could result in a rise in value. However, this isn't a certainty since macroeconomic uncertainty is a major issue that could determine its future worth. This is the chart then of this is also the US dollar, Bitcoin USD 1-day chart. So these are just on different days. No, I guess it's the same. Maybe they took them at different times. No, it's the same exact chart. I know they have it twice. Just 1 week ago, Bitcoin reached an all-time high of $29.79 trillion after reaching block peak 733,824. As the Arcane Research Weekly Report notes, the algorithm did this problem adjustment with a purpose to decrease the block manufacturing to the specified stage, and now it has never been as tough to mine Bitcoin. The problem is anticipated to drop by 0.07% next week. However, the same Arcane report notes that this increase in difficulty has not been an impediment to an increase in the new hash rate coming online. This means that the next adjustment might rather turn into another increase, pushing the issue even further upwards. Bitcoin hash rate has been slowly increasing over the last few months, but it has now reached an all-time high of 221 exahashes per second. The desired stage of block manufacturing is 6 blocks per hour. However, the surge in hash rate per week in the past changed into a speedy block manufacturing charge of 6.45 blocks per hour. Bitcoin's average transaction fees increased by 7% last week from $391,634 to $420,435. However, Ethereum still leads the pack in terms of high daily transaction fees with an all-time high of $231 million last weekend. I think, the jump in price is because more people at this point are using Ethereum, the Ethereum blockchain, but still, it's crazy high fees. This happened because Yuga Labs minted 55,000 NFTs, which required a lot of gasoline because of the high number of consumers. Ethereum's scalability problem is causing it to fall behind Bitcoin, which has seen a 7% increase in prices. This also shows that Ether miners have been making more money than Bitcoin miners for over a year. So if you're looking to get into mining, Ethereum is the way to go. Up next here, Coinbase's plans to purchase firm behind Mercado Bitcoin fall through. Let's see why. Coinbase and Brazilian company 2TM, the parent company of Mercado Bitcoin, have reportedly scrapped talks around the crypto exchange purchasing the firm. It has been reported that talks between 2TM and Coinbase have ended, and that the US-based crypto exchange was not able to purchase the Brazilian company. Let's see why. It is unclear what led to the purchase not going through. 2TM declined to comment, and Coinbase representative said it was simply committed to the Brazilian market. So I don't know if it's a legality thing, the law is there. Bloomberg Crypto tweeted out about that. 2TM, a parent company of Mercado Bitcoin, one of the largest crypto brokerage firms in Latin America, became a unicorn in July 2021 following a $200 million funding round. No wonder Coinbase wanted to buy them. This pushed the company's value ahead of Coinbase's reported plans to purchase it. 2TM also acquired a controlling stake in Lisbon-based crypto exchange CryptoLoja in January. So Coinbase is trying to consume or acquire, I should say, all of these other companies, right? They want to be the top dog. A Coinbase institutional investor report from December 2021 suggested interest in expanding operations in Brazil. In April, Brazil Senate approved a law to regulate cryptocurrencies in the country, expected to be signed into law by President Jair Bolsonaro by the end of 2022. Rio de Janeiro, the second most populous city in Brazil, also announced in March it will accept Bitcoin payments for taxes related to urban real estate within city limits starting in 2023. That is pretty cool. I wish they have something like that in the US. Maybe that's to come. Coinbase has been making offers to purchase other crypto and blockchain firms across the globe. We saw that. We talked about that in another article the other day about Coinbase trying to acquire a company in another country. In January 2021, Coinbase announced the acquisition of blockchain infrastructure platform Bison Trails, as well as the Root Fire platform for enhanced trade execution. In April, Cointelegraph reported the exchange was planning to buy major Turkey-based crypto firm BTC Turk for $3.2 billion. And we don't have any further update on that. It says Cointelegraph reached out to 2TM but did not receive a response at the time of publication. So maybe we'll get more information as to why that fell through. Last but not least here, U.S. lawmakers object to SEC's decision to expand crypto enforcement unit. That is pretty interesting, and let's see why. The Security Exchange Commission's decision to expand its crypto enforcement unit was questioned by several lawmakers and commissioners associated with the SEC of the U.S. The opposition to the expansion was based on the statement that the SEC is a regulatory agency with an enforcement division, not an enforcement agency. Further, Congressman Patrick McHenry, RNC, so Republican in North Carolina, also opposes, saying that SEC Chair Gary Gensler's decision on regulating enforcement is making difficulties in American innovation. What do you guys think on that? Do you think that the regulation they're trying to enforce is making it more difficult for innovation and expansion in America? Do you think it's making it better? If the U.S. wants to lead the deployment of the next generation of internet technology, it is necessary to provide clear, thoughtful rules for the digital asset ecosystem. Representative Warren Davidson, a Republican in Ohio, objected to Gary Gensler's idea of creating value, stating that it was a mistaken belief that more labor would create more value. He also reacted by saying that the SEC chair's decision is not helpful. Another U.S. lawmaker, Congressman Tom Emmer, a Republican in Minnesota, questioned Gary Gensler's decision to oppose the crypto industry. So it looks like a lot of these people are on board with crypto. I think there's a good bit of diversity within the Congress, so that, some are for crypto, some aren't. So I think at least it's good for people in crypto. We have some backing there. Congressman Emmer said he wondered how many taxpayer dollars are being wasted in Gary Gensler's personal crusade against the crypto industry. Representative Bill Huizenga, Republican in Michigan, spoke out against the proposed digital asset rule, stating that Congress should not relinquish its authority to Gary Gensler. He argued that the SEC's use of regulation by enforcement was a power grab and that we need responsible solutions, not edicts from bureaucrats. So I'm sure they will continue to try to make some laws in terms of enforcing this, make it more regulated. But as of now, it looks like Gary Gensler's, what he wanted to do is being, not supported by other members of the Congress. So take that as what you may. That is all I have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.